Today, I'm going to share with you what is candlestick and time frame. These are the foundation that you need leading up to the last day where I share with you the trading strategy that you will learn to make your first profitable trade. Candlestick is invented by Japanese to trade rice. How does it work? Let us look at two examples. On the left hand side, there's a start period and the end period. Within this period, the price can fluctuate up and down. There are four prices that you need to take note of. The starting price at the start of the period, the ending price at the end of the period, within the period, what is the highest price and what is the lowest price. With these four prices, it will form the candlestick pattern like this. The thick part is what we call the body of the candlestick, and the shadow, the thin part, is what we call the shadow or the wick. So the body of the candle represents the open price, which is the price at the start of the period. And the top part, it is the closing price, which is the ending price at the end of the period. The highest price within the period and the lowest price within the period is represented by the shadow of the wick of the candle. So this candle that represents overall price movement upwards, because the ending price is higher than the starting price, this is what we call a bull candle. Let us look at another example over here. Similarly, prices has moved within a time period. And there are four prices as well. The price at the start of the period, which is the open price. The price at the end of the period, which is what we call the closing price. The highest price during the period, which is the high. The lowest price within the period, which is the low. Again, the open and the closing price will form the body of the candle. The high and the low price will form the shadow or the wick of the candle. In this example, it has represented an overall downward movement in the price. This is what we call a bear candle. In the finance markets, anything that moves up, we call it bullish or a bull candle. Anything that comes down, we call it bearish or a bear candle. In the trading platform that I'm going to show with you in the next lesson, you will see that these two types of candles are represented by different colors. So it is very easy for traders to recognize, and that is the reason why candlestick is very popular among online traders. Next, I'm going to talk about time frame. Remember, I mentioned the time period. So imagine this time period from the start to the end is only 1 minute. This candlestick would have represented 1 minute of price movement. Similarly, this period could be 1 hour. In this case, the candlestick would have represented 1 hour of price movement. And it can go as far as 1 month period. And it will mean that the candlestick represents 1 month of price movement. This is time frame. Meaning to say, if you are looking at a 1 minute chart, every single candlestick that you see represents 1 minute of price movement. If we are looking at a daily chart, every single candlestick is representing 1 day of price movement. So next lesson, I will go to the trading platform where I will show you how you can be taking your first trade. See you in the next lesson.